Okay, let's get right into the stock market technical analysis. I'm going to show you guys what I'm seeing in the charts as of this morning. We'll try to find some profitable trade ideas. Leave me a thumbs up if you guys are finding value in this content. I continue to try to scan the charts and look for key good quality trade setups with high probability of being profitable. No guarantees, of course. I can't give recommendations and guarantee that you're gonna make money in the market, but what I can do is give you guys high probability setups in the market, and that's what I continue to try to do. So if you're interested in finding your own high probability setups, being able to read the charts, learn this as a skill set, take my stock market technical analysis course. I broke that down into multiple classes and give you guys a checklist on what to look for to find high probability setups, all based on the technicals. So everything is technically based, not look at the income statements and hope that none of that. It's all based off of, if the charts look like this, here's what you're looking for, here's the checklist, all that. And it's a priced affordable, link in the description below. And then again, if you're interested in being part of the private member group, it's $5 a month, very cheap and affordable. I'm giving additional trade ideas and market insights in there. All right, so link in the description for both of those. Let's get into the charts, guys. All right, so yesterday I talked about how I was covering my triple Q short. I'm not short yet, but here's what I'm looking for to either go short again, and that's really mostly what I'm interested in, at least as of right now. Not really looking for a long trade. I just don't see enough reward potential. The risk reward for a long trade is just not very favorable right now, so I'm more interested in reestablishing a short. And here's what I've got on triple Qs. All right, we're at some support right now. It's about 284.50. You can see it's right there. Okay, and we're just trading down there right now. So if they, that's kind of key support. So if we're gonna break back below here impulsively, get a nice impulsive close back below that 284.50 on the hourly chart, then I'll probably reshort triple Qs for a move, for a move lower. And we can look at some different levels. I mean, at a minimum, you would have a move down to 280 and potentially down to about 270. All right, 269.50, 270 has been a very key level, and we've had a lot of pivots off that level recently. Otherwise, if we hold right in this area, then we could get that final bounce up into this downtrend line right up here. Right now, I've got that sitting at about 306. That is going to be your bear market downtrend, all right, coming on the daily. So there's all the tags of that resistance. You've got, there it is right there, the 200-day moving average. It's just a key level of resistance right in there, anywhere from 206 up to about, 306 up to about 313. Major resistance, and that is a key area there that establishing a short is very objective up there. Okay, so that's pretty much it on the daily. Now, do recognize that this downtrend line is pretty obvious now, so a lot of shorts and a lot of people are looking to establish a short right up in this resistance area. So we may never get there, all right? When everybody's looking at a key level, oftentimes you don't get there. So it's something to look at. When I narrow down to the hourly chart on the triple Qs, you can see negative divergence on the hourly. So we popped up, made a divergent high, and now we're right there at that support line. So I'm kind of looking for that. If that breaks, we should head lower, probably heading down to this 269.50 area. Otherwise, we could get another divergent high, maybe run up, hit that trend line on kind of a final divergent high. When I flip over to the NASDAQ futures, you can see we had this wedge pattern here. It's kind of no longer really relevant, so I'll just go ahead and get rid of it. But the one thing we want to look at is big negative divergence on the hourly. It's just been building for a while, and you can see each little spike high has been a divergent high. So that's a divergent high, that's another one, that's another one. Okay, so these are definitely set up for us to break down and get some sort of a move down. And if we break down, we've got rolling out this trend line right here coming off of these recent highs back in August. And you can see we've got a lot of reactions on that trend line. There's some more right in here. So we could get that pullback to backtest support. So I'm watching for that. And as you can see, it's just starting to crack. My futures are slightly delayed, but we'll see if it actually can stick. All right. Okay, moving on. IWM, probably my favorite short right now, even more than triple Qs. And this is your small cap ETF. Here's the thing. Coming off the all-time highs in IWM back in November of 2021, I talked about this trend line yesterday. We have a potential trend line, but we didn't have a third reaction. We only have 2 data points, the high and then right back here in August of 2022. We now have a third reaction. There it is. You can see we hit it one day. All right. The second day they popped it just briefly, but still closed below it today, getting rejected relatively impulsively. So that's enough, of a reaction these couple days, this cluster, to tell me that this trend line is valid, and we can trade off of that now. So as I zoom in, that means we are basically trading pretty much right at resistance and starting to get rejected. We're back below the 200-day moving average as of right now. And it's, in my mind, it's objective to short right in here. Not the perfect entry because it's obviously down already a little bit, but it's about as close as you're going to get while we were waiting for proof that this was going to be a reaction. And so, yeah, I think we are probably set up for, the next leg lower in IWM, taking out the most recent lows, because this is a trending, this is the big trend. So that sets us up for a solid move, likely down to 145. So again, I'm staying short this. I actually added a little bit short to this today, and probably looking to add some more as we go. Zeroing it down to the hourly chart, you can see we have that negative divergence that's been building for a little while there. Right there. All right. So negative divergence at major resistance, major trendline resistance. It's just objective in my mind to short the thing right here. Whether we pop up today, maybe do that, maybe put in a new divergent high, that's completely possible. But again, this area is an objective area to short at. So I'm building my short position on this one, even though I closed out my triple Qs yesterday because I could see a little more upside there. This one looks like it's a lot more objective to short right in this area. So that's it on IWM. Well, actually, we can look at the RTY, which is the short small cap futures. You can see we've recently been making higher highs, kind of popping negative divergence on this hourly chart. All right. So the futures are definitely set up to fall too. You can see we're already starting to take out the lows right there. So looks like this is going to head lower. Let's do a quick look at the dollar. So again, the dollar recently hit big support right there at about 105. Okay, I've kind of pointed that out. There it was resistance, then it was support, and so that's support. The 200-day moving average is right there, so probably a little bit more of a bounce in the dollars coming. I'm expecting that, some sort of a little bit more of a bounce, maybe up to this 108.28, or even a full back test of this broken trend line. Okay, so a final move up in the dollar will likely be bearish for gold, and we'll probably see a pullback in gold. I'm a buyer on dips in gold, but again, this is gold bullion. We haven't had that dip yet. You can see we've just been marching higher. We might spike up and hit the 200, but in general, I think we're going to get some sort of a pullback. Levels to watch: 1725, 75, and then the 1680 is really a major level. All right, 1680 is, you can see support all through here. All right. Big level there, so that would make the most sense to me as a pullback down to 1680, maybe a brief undercut and hit this trend line, but in general, I'd be a buyer at that 1680 level, regardless if it dipped down to hit this trend line. I don't think you'll get that. So 1680 would be solid, as well as 1725. I'm a buyer here, and if it dips a little more, I'm a buyer down there. Not really buying too much below. All right, so looking to buy dips on gold. And here's the miners, so you can see they're kind of, they're trading way up here. It is set up for an island cluster top pattern, but the thing is that those typically come after extended uptrends, and we do not have an extended uptrend. So I suspect we're not going to get that. And in general, I think we'll probably just drift lower, maybe get, come down, hit this area of support. Let me go to the hourly, like a gap fill. So I'd be a buyer at 26.37, and then probably a buyer at this trend line down here at 25-ish. All right. That is the that's what I like on the miners. So I'm buying dips in the miners, not looking to short really, just looking to buy the dips. But we haven't really dipped yet in some of these, so need to give these. I think they can pull back a little more. FSLR, no real change. I'm still short this one. I like it. We're continuing to build on the hourly chart, big negative divergence, and that has not been negated. So look, even recently you can see the RSI is pointing down. So we're just continuing to confirm that negative divergence. Today it looks like they popped it up and made a new divergent high. Each one of these divergent highs keeps getting sold into. So you can see here, right here, we made a divergent high here, sold into. Made a divergent high basically right there. They sold into it, right there. Made a divergent high right here, sold into. The sellers are selling these divergent highs, although we haven't seen that big, move down. This is not when you want to be shorting. We want to have a short position, before we start to break down. So, in general, if you want to be conservative and wait, there is a potential trend line to look at right here on the hourly chart, right there, and you could maybe wait for a break of that trend. I think we're going to get it here relatively soon, but I'm still short this. Still looks good. And looking for a move down to this gap fill, all the way down here at 77.55-ish. All right. And I'll step in early. We're not going to wait for the exact gap fill. We'll cover our trade ahead of that gap, but I'm thinking we are going to get a decent-sized move down towards that gap. JP Morgan, talked about this one just the other day. All right. On the daily chart, you can see we've got some levels to look at. It's really right here. A couple reactions right in here. Chop through it right there, but a couple reactions. So that should be key resistance. You can see we popped above it briefly, but we're back below that level now. And that level is about 133.15 or so. Back below that level. And again, looking at the hourly chart, negative divergence, big negative divergence has been building. So these are divergent highs, and we're starting to roll over. I think we continue to roll over. Looking at the daily, at a minimum, down to the 200-day moving average. All right, from where we're at now, that's about a 6% drop. They'll probably try to step in and hold it at the 200 for a reaction. But we break the 200, then I would look at 119 as our next level, and then really, we're above the 200 right here, so we start breaking the 200. All this price action is going to be a bull trap, and it's going to signal that we're probably going to head down to this level of support at 105 and then ultimately break. Okay, so this is kind of big bear market stuff where, we've had a pretty strong bear market rally. We are in a bear market. If we're going to continue that bear market, we should make new lows. All right, and new lows would be below, these most recent lows here. So things to look for. I'm short this one right now. It's looking good so far. All right, Qualcomm. There's just so many to go through because what we're seeing today. Qualcomm, big resistance. I have to roll out on the daily right here at 122.55. I've got all those reactions marked out. Go ahead and mark it out on your chart. You'll see all the areas where we've held. It was resistance there. It was support for a very long time, but it's now been broken. You can see it broke. Resistance, rejected. Right back into it, rejected. Right back into it. And as of right now, rejected. All right, they got back below there and selling down and getting rejected. So that is resistance, and until you break that impulsively, we should go lower. Looking at the hourly chart, just barely got some negative divergence there. It just kind of showed up a little bit. So maybe they pop it around and grind it around a little bit. But in general, we're at the major zone of resistance. So I reshorted this one again today, and it just with the, yesterday they got me out because we gapped up, we held support, started to run. It looked like it wanted to maybe continue a little higher, but today's price action gapping down and, basically selling off looks good. So I'm reshorting it. That's the name of the game. Sometimes you have to give up a little bit of, give up a little profit to guarantee, or not really guarantee, but just if you're unsure on a position, it never hurts to get out. You can always get right back in if you see something change. And this to me looks like it's starting to change. So reshorted this one again. All right, AMD, very similar. So regardless of what really happens today, if it just wants to chop around, and it could be just choppy, as long as we're below key levels, the technicals still look good on this one for downside. So big, huge level of resistance. This was major support at 73.20 right here. Major support. All right. There's another reaction right there. We rallied right into that support level, overshot it a little bit, but we've today gapping down and right back below it. So I think that's to me that's pretty objective. That's a signal to short this. Now maybe the market makers want to play games and pop it back above and kind of chop it around up here. That's completely possible. I think it's a very clean level to short at, and we rallied right into it. So at a minimum, probably get some more downside, and also there is this potential downward channel. And you can see resistance popped it a little bit there, but we did have several reactions before that, and we're basically right there. So dual resistance, to me, it looks like a key level to short. Looking at the hourly chart, negative divergence has been building, so that's a divergent high right there. And yeah, that's about as good as we can get. Now, no guarantees it just starts working today, all right? Because when you're at key levels, you usually want to expect you're going to get some sort of games that play. Market makers love to run stops. The algos love to, near key levels, chop things around. This is where they run stops and fake people out. And, so you have to expect that and give it a little room. But, yeah, looks like a good level. IBM. So one of the subscribers left a comment, wanted me to know what I thought of IBM. Here's kind of my analysis. All right, this is a weekly chart. So big, huge pattern. We've got this big wedge that's been building. I mean, this is coming off of 2002. So major pattern right here. And this is kind of an isometrical triangle. It's an indecision pattern. You can see COVID we broke down, but I threw that out because it's kind of an outlier. And we are starting to break out. Last week we had a weekly breakout above this trend line here. And so far this week it's looking good as well. If I go down to the one problem I don't like with it right now is you've got negative divergence on the weekly. You can see it's right there. It's been building. All right. So again, this is a divergent high on the week. So that tells me that there's a kind of a high probability that this is going to fail. If I go to the daily, no real negative divergence on the daily. If I go to the hourly, you do have some negative divergence showing up here on the hourly, right there. All right, you've got lower momentum while we're making higher highs in price. So ideally, I'd like to see either this divergence get burned through, a back test, see if it holds, and then maybe can continue to run. Something like that. I think it's objective to maybe take a long here at 139-ish, 138.50, with a stop slightly below. Because if it breaks down, then this was all a bull trap. So that's it on that. Okay, that's all I have so far for this morning. So guys, take the course if interested. Check out the membership group. I'll catch you guys on the next one. Bye.